Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 21st of January. Starting off with active energy, and the recovery here seems to be well in place. We had the bear trap gap reversal in November. We had a gap through the 50-day moving average at the end of that month. That's currently at 0.45, but remained above the top of the gap as well. Which is a plus point. We've got 3 plus points so far, and then the fourth plus point is the break of this triangle from November at 0.5 pence, while we're above 0.5 pence, looking for the top of a rising trend channel from May at 0.8 pence. You could risk down to maybe the 50-day line if you were so minded. Next up is Dukemont, where we can see that the shares have they sort of shuffled out just outside the rising trend channel that I drew before. So if we just adjust that slightly, 0.79 is the floor of the trend channel, and the top of the trend channel still heading to 1.5 pence plus, in fact up to as high as 1.8 pence as a best case scenario over the next 2 to 3 months. I suppose if you're cautious on the stock, you wait for an end of day or a weekly close above a penny, just to make sure that that previous October peak had been broken, but at least while we're above that 50-day line, it looks pretty set fair for the shares to head higher. On to stock which has been problematic on a fundamental perspective at the very least, but looks as though Eve Sleep finally breaking out of this wedge formation, top of that wedge resistance line at 2 pence, while we hold above that, looking for retest, I suppose, at the bottom of that gap from September at 4 pence, and really nice. It would be nice to see an end of day close above the 50-day moving average, currently around the 2.21 pence level, just to confirm that the technicals are on their way. Obviously, the main resistance over the near term has been 2.5 pence, but after that bear trap below, from below the October 1.7 pence floor, looks as though the shares are finally on their way. Stock which has been slowly on its way is Jangada Mines. Here you can see how we've been sort of slowly pushing up from the that bear trap in December. The old November low 1.62, in December we went down to 1.5. Overall pattern here looks like a rising trend channel that you can draw from August, floor of the channel running level with the 50-day moving average at 1.79, top of the channel heading to as high as 3.5 pence. It'd be nice to see an end of day close above the 2.17 pence level today, the initial January high. I think we were around that level also in mid-November, so 2.5, 2.15, 2.17 pence plus would be positive. You could use the initial January resistance at 2 pence as the stop loss, or maybe risk down to the 50-day line at 1.79 to give the stock a bit of wiggle room. On to Jubilee Metals, which I've covered a few times before. Shares have been progressing, albeit slowly. The latest development is this sustained price action above the 50-day moving average at 4.09, and also the initial January resistance of 4.3 pence, above 4.3 pence, looking towards the top of an April 2019 price channel top as high as 5.5 pence, only back below the 50-day line, really questioning the strength of the rally in this stock. And for pharma, a lot of people seem to be willing that higher, and after an extended base for the shares, I suppose post-August, after the dizzy heights of 6 pence plus in July. Looks like we've broken neckline resistance at today's low at 3.45 pence. So above that, probably set fair for at least an attempt to fill that gap up towards the 4.7 pence level. Big target here up towards, well, obviously up towards retesting July resistance. If you're cautious on the shares, maybe wait to see if we can get an end of day close back above the 200-day moving average at 3.75. But with that as yet unfilled gap, the bear trap as well at the beginning of the month, and then the slide along the 50-day moving average, looks as though the shares are finally on their way. Stock which is already on its way is Scancell. Here you can see that gapped up to start the week above the 200-day moving average or actually through the 200-day moving average at 6.27 pence. So while we're above the top of the gap at 6.5 pence, looking pretty set fair for the shares. Obviously, we have resistance here coming up at 8 pence, but an end of the day or an end of week close above that could and should allow the shares to head towards the top of a rising trend channel from July as high as 12 pence over the next 1 to 2 months. So that does look like quite a strong situation, almost like a cup and handle situation there. So pretty strong setup for the shares, especially once they've cleared 8 pence. Finishing off with a stock which has also been in the sights of investors as potential ongoing rally situation. Here we have Touchstone Exploration. That's gapped up through the top of its triangle, that resistance line there, I suppose at, let's say, 22 pence. So while we're above 22 pence, which is also the floor of a rising trend channel from October, looking for further upside, possibly up towards the top of that channel at 32 pence over the next 4 to 6 weeks. Recent pluses, apart from the gap through the 50 and 200-day moving averages in December, were the golden cross buy signal at the beginning of this month between the 50 and 200-day moving averages. Just want to see now really whether the stock can easily clear that recent resistance at 25 pence. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.